Welcome back. This is your Crypto and Finance Week Ahead update for May 30th, 2026. As always, this is educational market commentary only, not financial advice, and it is not a buy or sell recommendation. Let's start with the board. Bitcoin is trading around $73,866, up about 1.8% over the last 24 hours. Ethereum is near $2,023, up about 2%. Solana is around $82.44, also positive over the last day. That bounce matters, but it does not erase the bigger question. Crypto is still acting cautious while equities have been stronger. Bitcoin and Ethereum are not leading the broader risk rally right now. That tells us the next week is not just about price momentum. It is a liquidity and confidence test. For Bitcoin, the first watch zone is the $74,000 to $75,000 area. If buyers can reclaim that zone with stronger volume and better ETF flow data, the market can start talking again about a move toward the $80,000 decision area. If that zone fails, and macro pressure comes back, the low $70,000 range becomes the defensive support area traders will watch. The macro backdrop is still the main driver. Recent inflation, jobless claims, housing, growth, and China PMI data have kept markets focused on whether the Federal Reserve has room to cut rates. Expectations have pointed toward rates staying unchanged at the June meeting, but the message from the Fed still matters. Kevin Warsh beginning his first week as Fed chair gives markets a new communication variable to price. Oil is another key risk. Middle East conflict keeps energy prices and inflation pressure in focus. If oil stays elevated, it becomes harder for inflation to cool cleanly. That can pressure risk assets, including crypto, even if the crypto-specific headlines are constructive. Now to institutional flows. This is the part of the story that deserves the closest attention. Reports showed XRP ETFs adding roughly $35 million from May 20th through May 29th, while Bitcoin and Ether funds lost roughly $2 billion combined. Another report said BlackRock's IBITs are a $528 million outflow, and the 11 US spot Bitcoin ETFs lost about $733 million that day. That does not mean the crypto trade is dead. It does mean capital may be rotating. The question is whether investors are stepping away from the largest assets or simply shifting toward newer ETF narratives like XRP, Solana, and Hyperliquid. For next week, stabilization in Bitcoin and Ethereum ETF flows would be a constructive signal. Continued outflows would keep the market on defense. Policy is the second major story. The Clarity Act debate is putting stablecoin rewards and yield directly in the spotlight. Jamie Dimon criticized Coinbase's Brian Armstrong and warned that banks may not accept parts of the current framework. At the same time, policy analysts have warned that crypto regulation needs enough oversight capacity, especially if the CFTC is expected to supervise larger parts of the market. But there are also signs of real integration. The CFTC opened the door to regulated crypto perpetual futures at firms including Calcia and Coinbase. Paxos won SEC approval to clear US stocks on blockchain. Those are not small headlines. They point toward traditional finance and crypto infrastructure moving closer together. That convergence is also showing up in sector narratives. Hyperliquid is attracting major attention, with Grayscale describing its potential as a financial services platform and Wall Street figures taking notice. Binance leadership has argued that established crypto firms and traditional finance will merge rather than one side simply replacing the other. There are risks under the surface. Security experts continue to warn about automated trading, custody systems, and weak operational controls around digital assets, especially where software touches wallets, credentials, or trading systems without strong isolation. Bitcoin quantum risk discussion is also resurfacing, not only around wallet keys, but around broader assumptions in long-term network security. On the token event side, Uniswap DAO proposals include expanding protocol fee infrastructure to BNB Chain, Polygon, and Celo, plus recalling delegated UNI Arbitrum governance has been dealing with frozen ETH linked to the RSETH incident. EigenCloud has an unlock around June 1st, equal to roughly 5% of circulating supply and worth about $8.5 million. These are not necessarily market-moving by themselves, but they add to the liquidity map. So here is the week-ahead framework. Bullish conditions would be simple: calmer oil, no hawkish Fed surprise, Bitcoin reclaiming the $74,000 to $75,000 area, and ETF outflows stabilizing. The risk scenario is also clear: oil stays firm, inflation anxiety rises, ETF redemptions continue, and Bitcoin fails the reclaim. In that setup, the market likely stays defensive. The key watch list is Fed communication, oil, ETF flows, the $74,000 to $75,000 Bitcoin zone, the $80,000 decision area, and whether capital rotation into XRP, Solana, and Hyperliquid remains healthy or starts to look speculative. Bottom line, the coming week is about confidence. Crypto does not need perfect conditions, but it does need evidence that institutional demand is stabilizing and macro pressure is not getting worse. Until then, treat the move as a watch zone market, not a certainty market. Again, this is educational commentary only, not financial advice. Stay disciplined, manage risk carefully, and watch the flows before trusting the headlines.